once you got a balance, then you can link it as you have now. So the first thing I do is I kill that link and make that, calculate that number. So the first thing you got here is your receivables, and I didn't. Let's see, okay. Okay, so you've got some calculation here that you did in your receivables, and let's see, you.
So Dr. Grasso, for those calculations, I was a little confused because in the assumptions, you say that net receivables are going to increase by 4 days of revenue each year, but then you also give the 5% increase of allowances. Do you have to know the 5% increase in order?
No. That's, as I said there, it's only notation.
Okay.
It only affects this number right here, this 8,095,000. And that just gives you an idea of how much of these receivables you think are collectible. So what you can do there is put in year 5 and increase that by whatever I say, 5% a year. And then this will relate to this last number here. But it's only an informational number.
Okay.
Now, to do your receivables, and I said 4 days of revenue per year. So you go to your operating statement and you look at patient revenues here, and you just divide that by 365. And that's 1 day's worth of revenue. Multiply that by 4. And then add that to your receivable total. And you'll do that every year.
Okay.
That would be 4 days of additional revenue. All right. Now, so let's see. So this didn't change. Inventories went up. Third parties of 6%. Long-term investment shouldn't have changed. And the assets limited shouldn't have changed at this point. Other non-current assets, 5%. Okay, so those look good. Payables, yes, they didn't change. Compensation payable, that went up 9% of the amount that your salaries went up every year. So yeah, accrued expenses 6%. Now your current portion long-term debt, that stays the same. That's your payment every year. At this point, it won't change. And your long-term debt should be going down by that amount, and looks like it is, yep. So that just decreases every year until you get some new debt. Now net assets, your unrestricted net assets, that'll go up, or in your case, down by the amount down here of your net income after total non-operating income. So you've got losses here, and so every year, then for those 5 years, that unrestricted fund balance will go down. It'll probably go negative sometime in here, which means you're bankrupt, but don't worry about that now. I'll fix that. That's only a temporary problem. Temporarily restricted stays the same, and right now, permanently restricted will stay the same.
Okay.
We haven't put any interest in there yet. So if you fix that unrestricted in the receivables, then you can subtract your total liabilities and net assets from your total assets and get how much your cash should be. And you want to make that calculation not in this box here because it'll create a circular reference for you. So you want to just kind of drop down here and figure figure out, your total assets minus total liabilities and net assets, and then, once you calculate it down here, just put the number up on here. Okay, so that will make your balance sheet.
We had a quick question, Dr. Grasso, about line 16, net property, plant, and equipment. So
Yes. Oh, yeah.
so what we did was we just we took off, I think it was the depreciation each year.
Yeah, that right, seems like a lot of depreciation, 3.5 million.
We
You
didn't.
don't have your original sheet up in front of me, is that?
That was the number that was the
I
number.
want to double check that number.
Okay.
And if, assuming that
That's what was on your,
once we double check that, assuming that's correct on the cash flow statement, or the balance sheet, sorry, can net property, plant, and equipment go to negative, or would it just go to zero?
it would just go to zero.
Okay.
Yeah.
Okay, thank
You
you.
can't have negative.
Yeah, that's what we had kind of determined at the end of our discussion, but we wanted to cross-check with you.
As far as
You just went to a different tab, didn't you?
Bring this thing around to look right, but, for just this assignment, it'll be strange.
Dr. Grasso, we lost you for about 10 seconds.
Zero there.
Okay, go to zero, okay.
Okay, you ready to talk about cash flow statement?
Yep. I think that was pretty set to go, wasn't it?
Yeah, did you have any, was it the beginning that we were good?
I think the only question we had for cash flows is,
Yeah.
can you hear us, Dr. Grasso?
Oh, no, you don't have your mic on.
Oh. Sorry, Dr. Grasso.
You guys out there?
Can you hear us?
Yeah, I hear you now.
Okay. I think the only question we had, on the cash flow statement was the prepaid expenses line. Looking at going off the assumptions tab and then bringing information over from our balance sheet. I didn't see any prepaid expenses per se. I don't know if you can tell us if we're right or wrong on that or not, but.
Let's see. Inventory due from third parties and other assets. So that's probably where it would be there under other assets, third parties and other assets.
Okay.
You got prepaid expenses and other assets. So just use that in this line here,
Okay.
where you can change this line on the cash flow statement to just say the same thing that the balance sheet says.
Okay.
Now, when you do this increase in your receivables, of course, we just talked about are going to go up every year. What you're looking at here is what effect is that having on cash? So as receivables go up, that means you're not collecting money. So it's a negative, an increase in receivables would be a negative effect on cash. So you put brackets around this one on all these in your receivables, okay? Same thing with increase in inventories. If you're increasing your inventory, then you don't have the cash, so it has a negative effect on cash. So both these things, and in fact, what I would do right here is, I did this in your money. I would put brackets around the increase here,
Okay.
just so you know that that's a negative number on these two items. So now we got them on this one here. Prepaid expenses and other assets. So if that goes up, an increase, that means it's a negative number. If it goes down, then it's a positive number, or it adds to your cash. Now you get to the increase in accounts payable. That means if you haven't paid something, you still got the cash. So if accounts payable increases, that's a positive effect on cash. So the same thing with employee compensation, expenses and other liabilities, and I don't have any for medical assistance here. It would be in here. Here's here. Yeah, I haven't used Arkansas in so long. I had to recreate the template for Arkansas balance sheet. I borrowed a little bit from Ford on that. So then when you look at the purchase of property, plant, and equipment, which of course you don't have money this time, but if you use some cash, that would be a decrease in cash. You know, you may have bought it with debt, or you may have used some combination, but we're not there yet. So right now there is no change in that. Long-term investments, I don't believe have changed. Let's see, 6,700,000. Where did you get that from?
I think that came from our previous operating statement tab.
Page 20, interest. No, you don't want to put it here because that's already in your bottom line up here. At 40,838,000, when you go to your operating statement, that already includes that 6,700,
Okay.
and that's an expense. That's not an interest income. So there's a difference between interest expense and interest income. So your investments don't go up at this point. If you were going to put something there from the operating statement, it would be this total non-operating income, which is most of it would probably be interest income, but we're not going to mess with that right now.
Okay.
So this line would be zeros again. There's no change in long term or assets limited. So those both stay the same. So you don't have to do anything with those.
Okay.
There is no new debt. And then repayment of long-term debt, see up with the brackets over here, that would be a negative number because the effect on cash is you're repaying that would be a negative impact on cash.
Okay.
So if you get those brackets right, and you get rid of the numbers in here, get your receivables in there going up, and those two lines would have brackets. You should balance them to what your cash flow statement this change in cash would equal for your balance sheet. So give that a try and see if you can get that to work out.
Okay. Great. Did anybody else have any questions?
Dr. Grasso, I just had a really quick question. So the FTE numbers that we need to reference are from Project 3, correct? If we're trying to do any okay. Thank you.
Yeah, so you've got on that expense statement, you've got the FTEs per adjusted occupied bed, you got your raw FTEs, salaries and all that.
Correct.
I haven't had a chance to look at yours yet. If I come across anything that I think is in error, I'll shoot you an email, let you know. I should be getting that in the next couple of days.
Perfect, thank you.
Created what is supposed to be in
Any other questions?
I think that's all the questions we had, Dr. Grasso.
Okay, great.
this. You want to ask?
Again, like I said, just give me a holler
How creative
if you got
should we
any
be
other questions
on
come up,
today?
and I can get you the answers.
On strategic
Okay,
growth?
Thank you so much for your
Thank you.
time. Have a great weekend.
Good weekend.
Thanks.
Thank you.